Performance Finance Coach. My mission is to help you to become a confident and independent investor to reach financial freedom and security. In my webinars, I share with you knowledge on how to manage your personal finances. I also give you insight into the financial markets and products from an investor perspective. How to read a fund fact sheet. This is our topic today. Fund fact sheets can look rather confusing. Some of the language used is very technical and can deter people from reading it. But don't be discouraged. They are actually easier to understand than you think. I'm happy to translate in this webinar all the financial jargon for you. If you would like to make informed and effective decisions with your financial resources, then join me for 15 minutes of financial literacy. Please note, as always in my webinars, all financial products mentioned here are for illustration purpose only and do not express a recommendation to buy or to sell. Today, I'm sharing with you a fund fact sheet of a Luxembourg-based fund managed out of Singapore. The fund is in Singapore dollar and it's a sub-fund of a larger US dollar fund. It is registered with the Monetary Authority of Singapore and suitable to be sold to retail investors. Let's take a look. At the very top of the fact sheet, you find the date this report was generated. The left column features the fund portrait. It describes the asset class and the industries in geographies the fund invests in. In our example here, we are looking at an equity fund, which is a fund that buys shares. It invests in consumer staples, which are products for daily needs and consumer discretionary shares. These are non-essential consumer products and services such as cars, luxury goods, etc. The fund can also invest in healthcare. This could be anything from pharmaceutical companies to private hospitals or clinics to medical technology. The focus of this fund is on the consumption of products and services in these sectors in Asia. The investment horizon is the minimum time frame the fund house suggests you should be invested in to iron out possible fund price fluctuations. The bottom paragraph describes the risk of investing in shares. It also mentions, and this is noteworthy, that this fund can invest into derivatives. A derivative is a contract that derives its value from an underlying asset. Fund managers use derivatives to secure investment against unexpected risks. However, sometimes the use of derivatives may pose a greater risk than the underlying security, as they are speculative by nature and involve a third party. This is something you want to watch out for when investing in mutual funds. But not all mutual funds use derivatives. The second column on the right describes the performance of the fund. The two graphs at the top give you a visual idea of the performance since 2010. The black line shows the performance of the fund, the dotted line, the index it is benchmarking against. In this case, it's the Morgan Stanley Capital International, or short MSCI, Asia ex Japan Consumer and Healthcare Sector Index. The yellow bars reflect the year-on-year performance. They show positive returns for the years 2010, 12, 13 and 17, negative returns for the years 2015 and 19, and in the year 2014, 15 and 16, the fund's return was just slightly above zero. Below, you find two tables. The first one is showing the accumulated return gross and net of sales charge over 1, 3, 5 and 10 years, and since the start of the fund. With 145%, with all fees deducted, the fund outperformed the index by 9% over roughly 10 years. So far, the fund has only started beating the index since 2019. The second table shows the return of the fund net of all fees on the third line, since inception per annum with 8.37%, slightly above its benchmark return shown in the last line. The footnote at the bottom explains that the returns which are shown in the above tables are net of flat fee. This remark is important as it explains that fees are already deducted from the performance shown above. Whenever you look at the return of a fund, it is essential to know if the return shown is net of all fees. That is the total expense ratio and possibly the sales charge. So you would always want to make sure you are given the actual net performance to base your investment decisions on. Now let's look at the fund features, that is, which elements characterize the fund. The fund is open-ended. It means it is a diversified portfolio of pooled investor money which can issue an unlimited number of shares. What is important for you here? The shares of the fund are priced daily and can be bought and sold daily. The domicile of the fund means it's where it is based. In this case, it's based in Luxembourg, but it's managed from Singapore. The custodian bank is UBS in Luxembourg, which means UBS safeguards the customer's shares in Luxembourg. The day of inception refers to the date the fund started operating. And currency of account gives you the currency in which the fund denominates. So you can buy and sell the fund in Singapore dollar in this case, even if the investment of the fund holds are in Chinese yuan, in Hong Kong dollar, or in Korean won, or in any other Asian currency. It's important to notice that the fund can be redeemed daily. You can sell this fund every day if you need cash. Of course, it is worth to remember that a fund always bears a residual risk of becoming illiquid if too many people want to sell their shares at the same time and share prices have dropped significantly. This can happen in very, very exceptional situations. But the fund world is well regulated, and Bernie Madoffs are thankfully the exception of the trade. Now, what does distribution reinvested mean? All dividends and proceeds of share sales are being reinvested in the fund. So the fund does not pay out any dividend to its investors during the holding period. If you prefer a cash inflow over the holding period, choose a fund that distributes dividend periodically. Now let's look at the fees. The fund charges a fee for managing the fund of 1.63% per annum. This 1.63% pays the operating costs of the fund management. In addition, the fact sheet quotes a total expense ratio or TER of 2.1%. This ratio gives you the total fees being charged by the fund per annum. It includes the management fees of 1.63%, as well as trading fees, legal fees, auditor fees, and other expenses. This is the annual percentage you want to deduct from the annual return or performance of the fund to be able to judge if the fund's net performance is attractive to you. About the benchmark that is shown here, I have already talked earlier. Aside from the characteristics, you want to look at the fund's current data. This section here gives you the net asset value of the fund at a specific date. On this fact sheet you can see that the per unit market value or price of the fund was $252.90 on the 31st of August. It also tells you the highest and lowest per unit value over the past 12 months, so you can compare where the price of the fund is now. Another important data is the fund's assets in million. It tells you how large the fund is. Of course, this number will only make sense if you put it in relation to other funds you might be looking at. Larger funds have usually a longer track record and often a larger and hence more specialized research team. In this case, the Singapore dollar fund is tiny with 3.79 million. The sister fund in US dollar is larger with 233 million, but still on the small side. Now we have to do a bit of statistics, which is probably the most confusing part of the fact sheet. There are 4 ratios you want to look at. They look pretty abstract, but I hope to make them comprehensible to you. If you have any questions or need more explanation, feel free to drop me a line below the video or send me an email via my website. The link you also find below the video. Under the statistical data, we find the ratio beta. It measures the fluctuations of an investment in comparison to its benchmark. A beta of 1 means that the fund reacts to market fluctuations to the same degree as its benchmark. A beta of above 1 means the fund reacts more to market fluctuations as its benchmark index. In our case, with 0.88, it reacts less. Another ratio fund managers like to look at is correlation. This ratio expresses to what degree the fund and its benchmark are connected. In our case, 0.92 and 0.89 are relatively close to 1, which is the index. So you could say this fund develops pretty much in parallel to the index currently, a finding we had earlier when looking at the performance graph. Now, the next 2 ratios are particularly relevant for you as an investor. One is risk or volatility, the other one is the Sharpe ratio. Risk or volatility expresses the extent to which the fund assets typically fluctuate. A fund with high volatility can generate big returns but can also experience steep losses. So you want to consider how much fluctuation you can stomach in your investments. The higher the volatility, the higher the risk. Lastly, the fact sheet gives us a figure for the Sharpe ratio. This ratio measures the risk-adjusted return, which might sound even more complicated to you. What it does is relatively simple. It measures the outperformance of a fund compared to a risk-free investment by taking into account the volatility. A risk-free rate could be the return of a treasury bond or the interest on a fixed deposit. In our case, the fact sheet tells us here it is 1.1% per annum. So you could take the annualized return, minuses by the risk-free rate, and divide it by the volatility, and you get the Sharpe ratio. In our case, the ratio is 0.85 per annum on average over 5 years. If the ratio is between 0 and 1, like in our case, the fund has produced an outperformance. But the outperformance does not compensate the risk of the fund. In an ideal case, the Sharpe ratio should be greater than 1. In this case, the fund would have reached an outperformance, compensating the higher risk. So it is quite simple. Just look for funds that have a Sharpe ratio greater than 1. Now let's look at something much easier and most interesting. Where is the fund invested? The portfolio structure by country tells you to which extent the fund is invested in shares headquartered in a certain country. In our case here, the fund is mainly invested in China, India and Hong Kong, and by 11% in other Asian countries. The portfolio structure by sector shows you the different industrial sectors the fund bought shares in. The largest portion here is consumer discretionaries. The fund fact sheet also provides an overview of the top 10 holdings. That is its biggest eggs in the basket. This is most relevant since these stocks have the biggest weight in the portfolio and influence the performance of the fund most. In our case, it's Alibaba and Meituan Dianping, which are both Chinese shopping platforms. Tencent is a Chinese tech conglomerate, which you might know through WeChat and QQ Instant Messenger. Kuichao Moutai produces and distributes Moutai and other beverages. Tile Education is providing the all-important tutoring for Chinese students. And NetEase is a popular Chinese gaming platform. The fund also holds shares of a Chinese dairy based in Inner Mongolia. Last but not least, I do not want to withhold the last page of the fact sheet, which contains the disclaimer. The Cambridge Dictionary describes a disclaimer as a formal statement saying that you are not legally responsible for something or have no direct involvement in. Now, this sounds peculiar if considering that the fund house managing the fund has issued the fact sheet and is now stating in a nutshell that it does not take any responsibility for your investment in their fund. Now, what you need to know here is a fund fact sheet is an information to market a fund. If you want more details, in particular on risk, you want to read the fund prospectus or consult with your advisor. The legal responsibility for the right selection of your investment according to your risk profile is your bank or your financial advisor. They will ensure, and more importantly, are responsible that the risk category of the fund complies with your personal risk profile as an investor. The Monetary Authority of Singapore takes this very serious. So if you're unsure, talk to your financial advisor to ensure that the investment you're planning to make fits into your risk profile and your financial goals. Now, what I personally miss in this fact sheet is the ISIN or International Securities Identification Number and the name or the names of the fund managers. You want to know who manages the fund, their track record, and if the fund has been consistently managed by the same person or the same team. Or if a well-performing fund has recently lost its lead fund manager and might not be as successful in the future, you want to know that too. I also would have liked to see a year-to-date performance. However, this information can be obtained from the fund house directly. I've come to the end of my presentation now. I hope you found it enlightening and it will help you to understand fund fact sheets better and give you more confidence in your investment decisions. As always, I love to hear from you, and if you have any questions, please leave them below or send me an email. If you would like to learn more about how you can grow your savings and how my long-term personal experiences in the financial markets can help you, please sign up for more webinars on my website. Please also take the time to read my disclaimer here. Thank you for watching. Your Women's Finance Coach, Monika Sturm.